Good morning, everyone. Welcome to the last final episode of Sunday Special of 2022. Today we've got Helen and Jay. Welcome, guys.
Morning.
Morning.
Morning. Final chat of the year. It's unbelievable, isn't it? It's uh, it's. I think we restarted those chats in October 2021. So it's been over a year of us actually chatting every Sunday morning at 9 a.m. It's been pretty extraordinary. And it has been a pretty extraordinary year as well for us in the business. And like so many things have happened. And also in the economy, in the UK government, in property, in everything. So many things have happened. So, good opportunity to have this episode to summarize 2022 and also see what's ahead of us 2023. That's something Jay loves a lot. Predictions. Jay, are you excited?
You know what? First of all, I'm grateful that we survived 2022
Yeah.
because it got a little bit rocky and rolly towards the end, like shattering of foundations, rocking and rolling. So grateful that we're still knocking about, still in business, still have business to do. And there's opportunities. I think that's the thing that I'm looking forward to for 2023 as a prediction. I am predicting far more opportunities, at least for us. So rather selfishly, I think there'll be more opportunities for us in what we do. It'll be great to hear from everyone that's listening what opportunities that they foresee for 2023 in what it is that they do.
Yeah.
Because it's there. And if you're not thinking about opportunities, if you're thinking about goals, you're a couple of weeks too early to start New Year's resolutions. Start with opportunity. What opportunities are you going to look for the next year? What are you going to be focusing on? Because what you focus on is what you see. So if you're focusing on finding those opportunities, you will start seeing them. Helen, let's start with you. What's your focus? What opportunities are you looking for?
Oh, I want to do some new and interesting stuff. Actually, that's kind of been my focus of this year as well. Like new types of deals with new people and new projects. And, I was a judge for women in construction. So I was working with the lovely Michaela Wayne and those ladies. So I've had lots of new things going on, which has been really fun. I just wrote down highlights, so many highlights of this year, and I did a thank you post. And obviously, you can't thank everybody because it would be like the size of Adam's Sunday supplements if I had to thank everybody for everything people have done for me, have helped me, this year. But yeah, kind of new opportunities, different things. I think next year is going to look very different for me. Yeah, saying goodbye to some old things or things I'm just not aligned with anymore, or people I don't want to be associated with. Perhaps is more accurate. And a whole new. I actually have got some really fun stuff planned, and not all of it is around property as well. I think I'm ready to kind of start doing different stuff kind of outside of property, or just perhaps broaden the scope of what I do. Yeah. Exciting.
Brilliant. Piotr, what kind of what opportunities are you looking for next year? Like what do you think we should be focusing on? It's always a profitable conversation from Piotr. What do you think we should be focusing on next year?
Conversation, yes.
Yes.
Focusing on making money, Jay.
Yes. That's why I always say these conversations are profitable, because Piotr goes straight to where the profit is. We're doing this and then more of this, and we're going to keep doing this until we have 100 quadrillion billion pounds.
That's what I was doing.
No, it's not always like that.
No, it's not.
I was driving back ready for this. I'm literally listening to my wealth affirmations thing the whole way, just
Yeah, it's not always like that. But I guess it's one of the focuses for the year, and it's a bit similar to I don't know, having right now I'm in Thailand. I'm on this Muay Thai retreat, and I've been training like crazy for the last 6 days. And yesterday I went out with some friends, and basically one of my things for this month is I'm not gonna drink alcohol. And then it's like, how you gonna have fun by not having alcohol on a Saturday night with people who are having alcohol? And it's like it's a tough thing, but it's possible, right? So when you focus on having fun, it doesn't necessarily need to mean certain things, or it doesn't need to doesn't mean that you kind of drop some other values that you've got. It just means that there is a new way of looking at something. And I think we continue doing things the same way we've been doing, like things based on partnerships and making other people successful as well, and helping other people resolve things in our field of expertise. And yeah, creating successful partnerships around that, and solving all the issues that come up in the meantime. So that's my kind of take on our focus for this year. And we should be doing this while maintaining, like, what do you call it, like physical and spirit edge.
An edge. I like it. Yes.
Edge.
Ed's up for that. Ed's already commented. Look there.
Yeah, and Ed as well. Edge and Ed.
Ed's up for more JVs. Yes, Ed.
Yes. I was thinking about this yesterday. I was in London. I met some really just some good guys, and had a chat, and then went out for the Auction Buyers Club Christmas party, where there was only me and one other Auction Buyers Club member. Just goes to show how busy this time of year is, but we made up for it. It was almost like there were 20 people there. So I was just kind of thinking, I was like heading back to my hotel room, which this time wasn't in a basement. And I was sitting there thinking, what does 2023 having, like, what are we going to do in 2023? And I saw some messages in one of the Auction Buyers Club WhatsApps. And I was like, you know what? I really like this joint venture that we're doing with Ed. And then I went off on this whole tangent, like almost having a bit of a rant to myself, like a madman walking through the streets of London. Like, the person that Ed JV'd with previously, but previous to the previous one, the arsehole guy, was like, this guy has completely fucked up what would have been just an absolutely amazing kind of opportunity, right? Because Ed is just awesome. There's, it kind of, we know what we're doing, Ed knows what he's doing, and then like he'll just go, oh, this needed doing, here's the invoice, and we're like, we'll pay it. Or like we'll say, Ed, can we do this? And he'll say, yeah, I'll be there, I'm there in an hour, or I'll do this, that, and the other. And the deal is just going so smoothly. He says that now everything's going to start going rocky, but the deal's just going so smoothly. And it's been such an absolute fucking pleasure working with Ed that I just kind of think anyone that's worked with him in the past and has decided to screw him over has to be the biggest knob jockey on the face of planet Earth. And it just doesn't make sense. So I'm definitely up for more JVs with Ed, if that's not clear. But yeah, just it beggars belief. I was walking back and I was like ranting. I was like, I can't believe what a fucking idiot. Blah, 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 blah. Just walking through the streets of London looking like an idiot at 12:30. Thought I'd share.
I think that's quite common, though, that some people, I don't know, when they have a different focus, should we be kind and say it that way, that they don't appreciate what the people who are there turning up all the time, giving their best, are committed. I don't think they appreciate what that brings to the table. And I think when that isn't appreciated, those people can only take a certain amount of, well, what frankly is disrespect, and will walk away, or will. Yeah. So I totally get that.
Yeah, I think for us partnerships, yeah, exactly, and for us partnerships, especially with the right people, are really kind of the key to grow. And yeah, what do you think, Jay? What else is?
One of my What am I looking forward to in 2023?
Yeah.
Okay. I am looking forward to the publication of edition 2 of Before the Hammer Falls, which may be renamed, it may not be, but it will certainly be rebranded. It's going to look absolutely stunning. I'm looking forward to the Hammered conference. So more news about that as we actually decide what the content will be. But it's going to be something fantastic because we're going to put a lot of time and effort and energy into it.
Awesome.
So we're going to put that together. We're in the middle of picking up our next trade, and I'm excited about that asset. That's got a couple of possibilities, whether it's trade and hold. And off the back of that trade, I think the relationship with the person and people that sent us that opportunity is just going to go to a completely different level next year. It's not just the one deal. We did something with them in the past, and I've got a previous relationship with them from previous work environment. So but getting a deal of that size and that caliber across the line, that's gonna pay for itself 5, 10, 15, 20 times over. And I think that's just exactly what it is. We need to 2020 and parts of 2021, we were getting a little bit distracted with sideline things. And I think that we're doing far less of that now. We're starting to really kind of, talking about putting in having everything within its own ecosystem, like an ecology. But what we were doing is we were adding so many different bolts onto that to make it like a full thing. We're like, well, no. What we need to do now is what are the 4, 5 main kind of things within that ecosystem, and then just try and block as many other things out of that.
Right.
And we started to do more of that maybe from Q2 this year. And I think that's really kind of moved us forward and opened up more doors and more opportunities. So more of that, please. I'll definitely take more of that into next year. Yes.
Nice one. For those of you guys who are wondering where's Adam today, he's unfortunately stuck on a business conversation with a lender. So I'd like to know the details of that lender, because they seem to be working 24/7. We need lenders like this.
Yeah.
But Adam is stuck on a business conversation, so he cannot join this morning. But Helen might give us a little bit of a update on the Sunday
it was really
settlement.
interesting. He was commenting on, obviously you've had rate moves, rate hikes again in the UK and in the USA, which are kind of the main focus for us. And actually the main point, it was 75 basis points and half a percent in the UK. And he talked about, there's a couple of really interesting points. He talked about, oh God, I've forgotten the phrase, but a dot graph, that's right, in the US. So it's anonymously, you don't know how each of the individual kind of committee members, well, it's Fed members, voted, but they plot it on a dot graph. So you can see who voted for more, who voted for less. And it's this kind of doves and hawks. That's the terminology. You're a hawk if you want to raise rates, and you're a dove if you want to decrease rates, or you're not as strongly in favor of increasing rates. So you get an idea of where the split is and where the sentiment is in terms of what the Fed individual member states want to do. In the UK, we don't do this, but they do it retrospectively. So each of the committee members, the voting is official. There's a voting record that's transparent, you can see, and they're allowed to publish comments as well, so they can put context around their decisions and why they voted for. Well, actually, Adam said one person voted for 75 basis points, so higher than the actual action that they took. But this was the really interesting part. 2 people voted for 0, so no move at all. So actually only 6, I mean, still the majority, but only 6 of the 9 voted for the action that was taken. So you start to see a disparity in, I mean, and that's quite a big disparity. That's not like someone wanted a bit higher, someone wanted a bit less. That's someone wanted to hike 75 and someone didn't want to move. That's a really big difference in opinion. And it just shows that, you know, I think there's been pretty consistent up till now in terms of the action taken or the consensus on the action taken. But now you're beginning to see differences come out. So it'll be interesting to see what happens going forward. I think Adam was saying 25 basis points expected in February and 25 in March as well. But the main point for me, which I thought was really key, and I wonder if anybody else picked this up as well, he said there is a huge difference, and there really is, in people are taking this as inflation has peaked. There's a very big difference in inflation has peaked to inflation is now back on its way down and will be under 2% again. He's basically saying it might have peaked. It might be off the top of where it was. And I think actually his comments were specifically around the US. But that doesn't mean it's heading like back down to low figures again. Actually certainly I am of the opinion that it's still going to stay higher than we've been certainly used to in the past few years, because you've still got all the economic like supply chain issues. Even if some of that starts coming back online, you've still got a lot of factors pushing into keeping prices high and supply low, which pushes prices high. So
but usually like
isn't going
I think
anywhere.
like that inflation, because for example it's measured usually year to year, right? So like if it's compared to the high prices of, let's say, mid 2022, it might be down because it's compared to a higher base than otherwise. So it might be coming down, but it's still going to be much higher than say 2-3 years ago, and it's still going to have impact. So I think might be coming down. I'm positive about this with my non-research based opinion.
No, I think that's it. We agree. Like it's coming off, but don't think it's not gonna be back down at 2% by the end of the year, or it's very unlikely to. You know, given what we can see so far.
I mean, I think a lot of the inflationary stuff, kind of is almost attributed to a large extent to the Russia-Ukrainian war, right? Because that's put a pressure on energy prices, on fuel cost, on the availability of wheat and other things like that, of which Ukraine was a massive producer of. All of those things have increased. You know, it's increased a lot of pressure, and inflation is used as a tool to kind of bring that stuff down or abate it somewhat. And is there some kind of, you know, even if the Russia-Ukrainian war was to kind of subside a little bit, you wouldn't see a release of that pressure immediately. It would, you know, these kind of hikes, they take, you know, a year to bring the hikes up, but 5 to 10 to bring them back down again. So you're not going to see, you know, the Bank of England committee go from 0.75 raise to keeping it where it is to keeping it where it is and a 0.75 drop. If anything, it will go, you know, it'll be a 0.25 drop, and that will be every year, one drop every year for the next X number of years, maybe.
And like Adam said in previous supplements as well, these things take time to filter through. And granted, we've had a number of raises now. So, you know, in theory, you're beginning to see, but there's a 6-month lag on when these things actually hit and start to have an effect. It's not like, unfortunately, sadly, it's not like, you know, with our mortgages, the change and the change happens the next day. It's not, it just doesn't work like that in the economy. These things aren't that instantaneous in their effects. I mean, I have a slightly different opinion on, like, absolutely, you know, Russia, Ukraine, etc., has had an impact, but this has been coming for. We've had supply chain issues throughout all of lockdown. China's been a massive part of that. I think we talked about this at least a year ago.
Yeah.
That stuff just wasn't coming out of China, and all the shipping containers and everything was locked up. And, you know, you're hearing about kind of like car suppliers buying washing machines to take a certain chip out to be able to do that. And, you know, when you're getting into measures of that extreme, that pressure has been building a long time. So exactly what you said, this ain't no quick fix.
No.
Yeah.
Yeah, so for all those who thought we would get on here and start saying about how quick and easy the fixes are going to be, sorry.
Sorry about that.
Sorry.
Pop the Christmas bubble.
Yeah, but I think that like having an expectation that it's not going to be a quick fix gets us the quick fix quicker, because if everyone's got that expectation, then everyone's focused on actually the fundamental things. So I don't know if is my connection bad?
It's going a bit fuzzy.
Okay?
You look a bit like you look a bit like you live in Minecraft. You've gone a little bit pixelated.
Yeah. But we can hear you. We can hear you.
Okay. Good. So what I was going to say is that by having expectations that it's going to be still and like a challenging year ahead, like that gets us to the actual good times quicker, because people are focused on the right things, on the like more fundamental things, rather than risky stuff that may not pay off.
In addition, the government needs funding, right? And the best way the government gets funded is by people spending money and earning money. So I'm of the opinion that there may be some loosening of some of the recent landlord legislation that's come in that's cost landlords quite a bit. I don't know which one yet, but I have a gut feeling that there's quite a bit of pressure, because the response from the landlords is fine. Yeah, this no longer works. So now we're going to evict the tenant and sell the property. And more than 50% of those properties being sold aren't going back to landlords, which means people who can't afford to buy but can just about afford to rent can no longer buy and can no longer rent.
Yeah.
So I think there needs to be a redress there to get the landlords back in to provide the very essential service to the country that they provide. You know, local authorities no longer have the levels of housing stock to support the level of population. And these things are problematic.
Yeah.
I wonder if that's...
Sorry.
Go on.
No, I just wonder if that's why they've started... And I don't know why it is. I've not looked into it enough, but I wonder why like bigger, like non-traditional players have started to move into the market, like your John Lewis, like Lloyd's going into like Resi themselves, and these players that are, I don't know. If it was a one-off, random decision by, a change of strategy by one company, fine, but it's a trend, it's a theme. So there's obviously some incentive or encouragement, should we say? But I just to plug that gap. I don't know.
It needs landlords.
Yeah.
You spent not you personally, but you as a government have spent the last 30-ish years divesting out of your held residential stock for tenants, etc., which is why the PRS became such a big thing. You're not building enough.
Yeah.
And the flip side to not building enough is you're making it highly unviable for developers to build stuff. I mean, it's not bad enough that they've got the cost of materials and the cost of labour, but now you've got the mayoral seal, you've got the normal seal, you've got the 106 thing, and you've got the other thing, and now you have to do this other thing, and then there's another. Then all of these costs come up, and no one can really afford it unless you're on some kind of board for building out social housing, and you've got the contract, and the government is offsetting the cost of blah blah blah. Everyone that's building other assets doesn't have that.
And yeah, now they've abandoned the targets, haven't they? So
They've also
it's like,
abandoned.
they've
They've also abandoned help to buy, or which is more commonly known in the industry as help to sell.
Yeah.
Which, you know, I don't think I was ever really a massive fan of, but there was elements of it that were quite attractive, and I think that's going to slow down a lot of people that were on marginal developments and build outs that were relying on in the past have been relying on that help to buy. Those deals are unlikely to get done now unless they're able to acquire them for far less.
Yeah.
But there's going to be a loser here. And the government can make sure that that's not the case. And they would get far more developments. You know, they'll get volume and velocity rather than one or two developments, you know, where they're not getting the same in the way of VAT being charged on materials or taxes on the people in that chain. And there's a ton of people in that chain. Planners, architects, developers themselves, project managers, site managers, health and safety, and that's before you get to the chippies, the electricians, the plumbers, everyone else, the plasterers, you know, there is an entire industry that's built off the back of that. And what they're doing is they're clamping both sides of it. This is your private rental sector, and this is your development sector. And what's in the middle is a balloon that is going to explode with sites that can't be developed and properties where you can't live, you know, because there's nowhere to rent, there's nowhere to buy. And the affordability of being able to do either one of them is reducing because the cost of everything in that pipeline, in that chain, is ever increasing. That's quite explosive.
Yeah.
But I think something needs to be alleviated there. And Rishi seems like he has 3/4 of a brain on his shoulders, which is far better than any politician for at least the last 10 years. So let's see if he can pick up on that and relax some of the pressures. Because stamp duty and other things. Sorry, Piotr, go for it.
I'm saying will be definitely interesting. Yeah, and I guess those housing policies, those are more to do with like the housing ministers, right? And those housing ministers keeps changing every few months, and so there's very little consistency of how things are being done. I think that's gonna be something that continues to be a challenge and a block. But yeah, it's in terms of like 2023 as like where would you see yourself at the end of 2023? I always find like looking at the end of the year and like predicting where things are like quite useful in
you tell us then. You go first.
Then I don't know, set like a pathway.
Right.
Sorry, I don't know what you guys what you guys heard.
You tell us then. You go first.
Yes. Okay. Cool. Yeah. Nice one. Well, at the end of 2023, I see us we've got 2 really strong auction buyers clubs, and I can see those auction buyers club having done like at the moment we already kind of are quite recognized amongst auctioneers who bring us deals or tell us like this needs to be done, and then suddenly like within 12 hours someone buys the property that was suggested. So the auctioneers recognize the potential of the auction buyers club. And I can see by the end of the year there'll be no auction in London where the members won't be buying something basically, or someone connected to us won't be buying something. So I can see that deal and auction by in December 2023, we like 1 auction, 1 deal for members of the club. That's basically my prediction. That's where I want.
Oh,
it was just getting good.
cut cut off in his prime.
In his absolute prime.
Oh, he obviously got too excited and the energy was just like, ah!
That's
He's back, he's back.
Yes.
Oh, look, it was like an episode of EastEnders. You just left us on the cliff.
And
like,
both of us just went.
Yeah, and what did I say? What did you guys last hear? Because I finished everything I had to say.
Oh,
Did
no,
you?
a deal per auction in December 2023. And then
Yeah,
you went
that's
on to
right.
say
So
something else.
Yeah. Yeah, it's I don't know what. Okay, anyway, I don't want to like repeat myself, but I'll repeat in case like no one heard. So at the moment, like the auctioneers like offer us deals, and then like on quite a few occasions, our Auction Buyers Club members buy them within like 12 hours of the auctioneer saying something that this is a good deal, might sell for a good price. And I can see that happening regularly by the end of 2023. So our focus is like really on building and maintaining that our members' ability to do deals like regularly and at like this. So that's the key focus of 2023, and doing our own deals and doing partnerships. So I think by end of 2023, it's what, Jay, four JV partnerships, 2 with Ed, 2 with other people. I think we've got 2 slots available.
I think we should have a target that we do a deal next year too. We've been talking about it for so long.
We have, but I tell you what, I'm on a 50-50 about whether I want to do a deal with you or not, Helen.
Oh, why?
I'm going to come out and say it. All right, I'm just going to come out and say it. All right, I really enjoy having you as a friend.
Yeah.
Do you know what I mean? And sometimes, even if the deal goes well or goes badly, right? It's. I'm quite happy with the relationship as it is.
Yeah. I think
so that's the 50-50. It's there's nothing like, oh, you know, that's all it is. That's all it is. So I'm kind of struggling. Fair point.
Do you know what? Yeah. I'm not being funny. I've had that thought actually recently myself. So something I won't be doing next year. Oh, I might rule myself out of a JV now that I really want to do with you, is I've done some deals with people that are business people, but are also friends. Do you know what? I ain't doing that again. Too bloody hard. It was just too difficult. Yeah. Now, that doesn't mean we can't do a deal, because what I would change is the way I had that structured. And I think if you have much more specific structure around the way you do, so everything's very clear, this happens, it means this, this happens, it means this, then it would have alleviated. So I've started putting a post together. Again, it's probably going to be an Adam-sized Sunday supplement of things I've learned this year and wouldn't do again, even with, you know, the experience I've got and the deals I've done. And I'm just like, I ain't doing that again.
Yeah.
No, you know, I set my life up to have to not have sleepless nights. And a few people this year have caused me sleepless nights, which I didn't anticipate that could come into that scenario. But I've learned a lot. It's been a fucking hell of a year. Pardon my French. So I totally get where you're coming from. Yeah.
Okay, I think maybe the 50-50 following a conversation may sway upwards rather than downwards, based on what you're saying there. So
yeah.
So you're on 51% now, Helen. Keep going.
That's it. That's it. You got
by the end of the year. I can see you by 1995.
Yeah.
Oh, amazing. Got a couple of comments.
Can I just clarify something, right? I'm really going to go for pushing my percentage up here. Do you know where it's gone wrong? Okay. Because I was thinking, actually, I'm still very good friends with some people that I've done deals with. And do you know where the friendship is maintained? When people did what they said they were going to do. where the challenges have happened this year, where I've had sleepless nights, and that is because it's like, hang on. We said this, and now you're not doing this. And I'd been, you know me, I'm very like manage expectations. And I'm like, and then to suddenly find out, no, this isn't happening. I'm like, excuse me? So I think that gives me more confidence and should give you more confidence for us to do something. God, I'm doing a right pitch on myself here, aren't I?
That's it.
Because you do what you say you will do. And you always do.
Yeah. We, you know, yeah. I mean, and you haven't done a trade before, have you? It's all mainly been development.
No, exactly. So I'm quite like.
Okay, the percentage is going up because I'm kind of now thinking we've got to pop this cherry, Helen. We've got to break this one in. Let's do it. Okay, cool. I'm now at 80%. Piotr. It's for you to kind of swing me back down.
80. Wow, Jay.
I know.
You are like really volatile.
I know. That's a super swing, isn't it? She put a good pitch in. She put a good pitch in.
Now, to be honest, I was always in 100%. I don't know what you talk about, but yeah.
Yeah. Maybe I just said it to get Helen to pitch.
I was just
the way
backing
she
you
did.
up, you know.
Oh, that is the most excellent strategy. Oh, I love it. Yeah, we don't want you. Oh, please have me. Love it. You are even more a genius than I gave you credit for. Love it.
That's the way we do deals as well. So that's how we negotiate. That's how Jay negotiates as well.
Yeah,
all the good deals. So there are good sides to it, Helen. Brilliant. A couple of people ask about the Auction Buyers Club. Joanna asked.
Well, we are a little biased, but it's a bias.
We are biased.
Yeah, we're completely biased. We're completely biased about how good
Jay
the auctions are.
I think I was going to post it.
It is, and I've been a member. I was a member for a while, wasn't I?
Yeah.
And it's practical. It's not just theory. You're looking at deals. You're looking at live deals. You're prospecting it. And actually, what I like about it is it's sensible advice. And you get to brainstorm kind of deals, what to look for, what not to look for. And I'd say as much as you've helped people make, you've done exactly what actually I try and do. This is obviously why we're friends. As much as you've helped people make money, you've stopped a lot of people from losing a lot of money as well. And
we talked about this last week. We've seen
so much value in that. And people don't like paying to help you stop them losing money. But that's actually where the bloody value is.
The amount of people we've done like the odd kind of consultancy with, where at the end of it, they paid £100 for the 30 minutes, whatever it is. And they said, so you're telling me I shouldn't buy this property? I said, that's exactly correct. You don't, this is not for you.
Yeah.
And on occasion,
saved you £100,000. So that was
easily
really well spent. Yeah.
And there was one guy we were talking to, and I basically said, you weren't aware that there was like £20,000 worth of fees in the special conditions. And then off the back of £100 investment of time with us, he saved, I think it was like he only paid 1,500 instead of 15,000. So that alone, like on a value metric, is insane, right? Because that goes back to the bottom line. It's mad.
Can I get those?
But
that return on investment, please.
But like you say, it's one of those things where it's so intangible for the most part. Because don't buy this. This is not going to work out well for you. Then they think, okay, that's £100, and what's the return on that? I'm not doing an investment off the back of it, so that's just wasted. It's not. It's you've arbitraged your loss against a tiny cost.
It's so the wrong way of looking at money. It's such a narrow, short. Oh well, I wasted £100 to not do a deal. Oh my God, that was the best £100 you probably spent this month, this year.
Yeah.
Get get it every time. I had somebody come to me. She was doing a deal. She was stepping up a deal, and I think it was like £4 million deal. And I said, yeah, great. Want to chat to me about it? Yes, I said, book in some time, and my rates are higher than yours, so you're a bargain, quite frankly. I think we need to add inflation to your rates for next year.
I think Piotr's already calculating that in, don't worry.
And I said, yeah, book in a session, like happy to go through this with you. Bear in mind how many of these I've done, how many mistakes I made, how many developers I see with rose-tinted glasses on who are just looking at this, looking at the end number, and I'm like, but you've not thought about that or that or that or that. Oh, well, and she went off and thought about it, and then she didn't book in the session. And actually, I don't know if the deal went ahead, but I'm like, for the sake of a few £100 to risk, not identifying all the risks that I know you won't see up front. I don't know. It is a false economy. Well done. You saved yourself £200. That might cost you your home if you put a PG on that deal. I don't know. That's not the type of risk I take.
Definitely. I'm just looking for in the background, looking for the links to the expert property story where John, like, is our member, and he recorded a couple of episodes. He actually joined as an expert. He's based in Hong Kong, and he joined with a challenge. He wanted to learn how to buy property remotely from where he lives and using an auction, because someone told him auction is the best way. So basically, he joined in April with a challenge to buy at least one property in the last 6 months, and he bought 4 flats and 2 houses, and he's not finished yet. And literally, the guy turned into a monster, and he recorded episodes. Like, his podcast is phenomenal because he puts a lot of editing into this, and he makes it into like an amazing story. So listening to it is quite amazing. And I'm just trying to look for the episodes that relate to the Auction Buyers Club to basically post for people who want to know about Auction Buyers Club from someone else rather than us, basically. I can't find the links. I'll find it and I'll post it, and you have it. Brilliant. There's a comment from Kate. Kate, do you want to take this one? For interesting, critical down professionals, we've seen huge deterioration of quality in the build trade as they struggle to manage their business.
I mean, you're when they changed the what was the accounting thing that changed for people who said they were self-employed, but I were self-employed but only worked for one person? What was that thing that came out that screwed everyone over? So in the like building trade, you would have a company, and then they would have like 3 or 4 chippies on their books, 3 or 4 plumbers, 3 or 4 electricians that were all self-employed, but their sole earnings were coming from this one person or one company, right? So when all of that changed, all these individuals now had to either become employed, which was bloody difficult because these companies work on finer margins, so they couldn't employ them at the same money that they were charging them out at. No. And these guys aren't business people, so they weren't looking to start their own business, and all of the admin and the flim flam and the other bits and pieces that have to go with it, right? And that's created a higher price point for services and for costs and materials. And it's also meant that a lot of the people that are in the marketplace are struggling to maintain their business because they're not business people, that, you know, they're tradies. And I'm not talking down at that level. I would struggle. If I bang a nail into a wall, I guarantee I'll hit like the main electricity line and shoot myself through a window. 100% it will happen, right? And if I don't do that, I'll hit a pipe and I'll flood the place. Something will go wrong, right? So I have tons of respect for people that are able to just go, practically speaking, this is what needs to happen to make sure that nothing explodes, right? Yeah. But 3 or 4 electricians. There was an echo, but the reality is, I completely agree with Kate. There has been, you know, as well as developers and main contractors going broke, especially during COVID. But you know, the rate of people like that going broke is is a rate of knots on a regular basis anyway. It's a real tough business. It's a really tough business.
Exactly what you say. I say that about developers as well, and it's something I look at when I'm choosing people to invest with in development, which that's going to be a change going forward, let me tell you. More trades, less development. That you have to be able to, so not just do your job. So like you say, not just be a great sparky plumber, like whatever. You have to be able, you're not just be a great developer, you have to be able to run your business as well. And I've seen this happen. Somebody could find the site, get the right team around them, build the site. He could not manage cash flow. And because he couldn't manage the company and the running of the company, that jeopardized the project. And guess what? Well, actually, boom, imploded. You have to be able to do both. And they're very, very, very different skills. And that's exactly what you're saying with that. So, yeah, that's making everybody's life more difficult, Kate, isn't it? And frustrating. And more sleepless nights.
Kind of brings about why we don't really build anything out or do any physical work because risk. I mean, the rewards, you know, if
and not only that, the risk and also we don't really, like, for example, do HMOs and stuff. We try to focus on simple things, and I guess construction isn't a simple thing. Like if you're a construction business owner, that is not a simple thing. That is 10 times worse than running an HMO.
Yeah.
And we don't like running HMOs because they're too complex. So yeah.
And as we've talked, like the margins on all of it are just getting squeezed. I remember seeing a presentation by Paul Higgs. It's one of the very first, I think it was a landlord investment show or one of those property investor show, one of those, before I'd ever done any of this type of investment, so kind of probably pre-2015. I saw Paul Higgs talk there, and he had this brilliant graph. You know the way my mind works in numbers and graphs and things, and he showed basically the margin or the profitability or the marginal profitability of where profit and risk gets added in the process, you know, because he's all about land, obviously. He said, actually, when you know what you're doing and you buy well on the land, you know, like here's the profit. When you then decide to go into development and build that thing out, then yes, your NGDV is bigger, but you've just taken on this much more risk. And actually the profit is going to you're going to add that much. So yes, you will make more money, but you've just taken on a whole lot more risk. And what you need to assess is building that thing out, taking on that extraordinary risk for a little bit more profit. Is that worth it? And are you the person to do it? And I would say a lot of people aren't.
Yeah. And I think like development is very much, unless you're like a super good savvy negotiator and you understand the risk and everything else, it's like that you will go bust in, like, because of the cycles of the market, right? Developers make money when the markets go up, and you don't need to be a good developer to make money from the market going up. But if the markets are not doing well, then it's like it's really the skills and negotiations and stuff come up, and they basically show when the market are not doing well, because all of the clauses you didn't negotiate in the contract, all of the things you didn't think about come to the surface, and that's why developers go bust, because there's no way of predicting that. That's why I'm so fucking annoyed when developers saying, "Oh, it's not my fault, it's the market's fault." No, it's your fault, you bitch. Basically,
that doesn't sound like it was seriously targeted at a single individual. That was
no, it wasn't, definitely, but it's people don't like taking responsibility for something that should have been thought of early on, and
I mean, it's one of these things where, you know, for us, a trade can be anywhere between 7 weeks to 7 to 9 months, right? That's our average kind of speed and turnaround, you know, across the board of things that we've done recently. But for a developer, it's you know, if it's just a conversion, you're looking at 12 months, And if it's a build out, you're looking up to 24 months, right? From start to finish, and dealing with conditions, and then selling and trading, all the other bits at the end. A lot can change in that time. And if you look at the last 2 years, a ton has changed in that time. But Piotr's right. Like, you have to be able to roll with those punches as they come. And if you buy bad, you'll sell bad. Yes. The main thing that you mentioned, Helen, I did a podcast with a guy called Raj from Property 2.0. Really interesting. Like, really, his interview style was like really engaging. And he said, like, what's like the one piece of advice you'd give people in property? I said, look, I don't think real estate investing is for everybody. I said, of course you can do it. So just because you can doesn't mean that you should. Yep. So I don't understand. I said, well, let's say I'm hung like a horse. Just because I'm hung like a horse doesn't mean I should go into porn. Just because you can doesn't mean you should. Do you know what I mean? And I think he kept it in to the podcast. I need to listen through it because I think that would be amazing. But the people have messaged me, like, it's probably the second or third time I've done a podcast where someone afterwards has gone, you know what, that was actually brilliant. Was it Tim? What did Tim say? Yeah, just because you can doesn't mean you should. And I think that can apply to a lot of things in life, but certainly investing, right? Okay, you've got 50 grand in the bank. You see these things on these Facebook groups all the time. Oh, I've got £50,000. How should I invest it? Well, first and foremost, you understand that just the thought of investment is surrounded completely 360 degrees by risk. If you're not an investor, or you don't have an investment mindset, or you haven't got the knowledge and experience, or you're not going to go out and do that, then spend your money. Get a jet ski, go on a cruise, learn to fly, whatever. Like, just live your life. Because if you're a solid investor, your life isn't always like that. There are a lot of people that are building portfolios that not that we used to call it living on the baked beans and toast life, right? Because they're not extravagant people. They're not out there, that they haven't got the £120,000 Porsche, and they haven't got all these big things. They're just building a portfolio. They're making things happen. They're quite stoic and they're consistent. And then you have the people that do all the big loud things, do all the other bits and pieces, and then you see the crash and burn 5 years later if they make it that far. And it's because it's easy to make a little bit of money, and it's easy for that to get into your head and tell you that the rest of it's easy and it's always going to go in that direction. And it doesn't. Sorry, more bearings of bad news. Sorry.
No, but it's a great lesson in red flags. These are all red flags. Yeah.
What was that, Piotr?
I think it's more realistic news than bad news.
Yeah,
it's not necessarily bad, but it's yeah. I think bad news would also need to have like a bad intention behind it or something. I don't know.
Yeah, no, but yeah, realistic news. There you go. Dial in at 9 o'clock on a Sunday morning for some realistic news.
Yes,
exactly.
We should rename this chat to Realistic Sunday Special.
Yeah. I'm gonna share the link to your podcast. I know you put it in a post recently, but yeah, that will be my over Christmas listening, and I shall guffaw out loud when it gets to the bit about being hungry like a horse. Oh, only you.
Well, I mean, in fairness, it was my cousin who kind of said that. He goes, just because you're hung like a horse doesn't mean you do porn. And he used to say that all the time because it was his statement as to saying, just because you can doesn't mean you should. And it kind of, there you go. Now I'm giving away why I talk the way I talk, because I hung around with people like that growing up. But yeah, it's apt. It's apt. Which is unlike most of the swearing and sexual innuendo I use. So,
Nice one. Cool. Well, we hit 2 o'clock, so let's wrap it up for this year. We'll be back won't be on Christmas Day. I think we'll leave you guys alone with families and doing what you do on a Christmas Day. We won't be on the 1st of January as well, taking a day off. Why not? Why not?
We'll treat
Let everyone
ourselves.
recover from the hangovers. Yes.
We'll be on our
be
jet
back
skis
on
in the Bahamas.
Yes. Yeah, exactly. Or if we have withdrawal effects, we'll come back at some point before 8th of January. But 8th of January is the default comeback date. So
And that's a very, very, very special day.
We knew that already. Yeah,
Oh.
100%. Yes.
That'd be really nice to me that day.
So we're leaving with a bang. We're gonna come back with a bang. Nice. Amazing. Really good. Well, wishing everyone happy Christmas and an amazing 2023. And we'll see you guys in the new year.
Happy Christmas.
Have a Merry
Happy
Christmas
New Year.
and a happy, healthy New Year.